Hi traders, this is Houston Trung from thetradingedge.org, and this is your weekly market analysis video for the coming week of March 11th. And in this week's market analysis video, we're going to take a look at a number of markets and instruments to prepare you for the coming trading week. So I hope the levels we provide here in the analysis help you prepare for your upcoming trading week. So we're going to cover the VIX today, spiders, Qs, as well as the long bond, gold, Bitcoin, and oil. So let's begin with the VIX product, and I like to use VXXB as a proxy for the VIX. Now, before we get into things, and before I launch into the analysis, just want to quickly explain the charts you have in front of you. So in the bottom right hand corner, we have the monthly chart. Bottom left hand corner, we have the weekly. Top right hand corner, we have the daily. Top left hand corner, we have the 2-day chart. And you may see some step lines here in orange and in purple or blue, depending on your screens. But the orange represents the monthly open, and the week represents the weekly open, or excuse me, the purple represents the weekly open. Okay, with those formalities out of the way, let's launch into the analysis. So starting off with the VIX, what do we have here? Beginning at the highest level first, which is very important to look at the highest time frames first. So on the monthly chart, we have a green month. So after the first week's trading, the VIX is firmly in the green. On the weekly side, the VIX managed to log its second consecutive green week in a row. Now, last week, we actually ended the week as an outside week, meaning we had a lower low and a higher high in terms of the week's price action. On the daily chart, we see we had 4 consecutive green days, followed by some profit taking on Friday. In fact, this whole week's momentum was based off of this huge outside day that was put in on Monday, followed by the consolidation day on Tuesday, outside inside pattern, followed by the break to the upside, taking out all those stops of folks who were short VIX coming into this week's action. So on the 2-day chart, what's revealing is that we see here that we actually had open on Friday at 34.02, a gap up on Friday that is, and then it quickly ran up to the point where it was able to take out this major pivot here at 34.54. So anyone who had their stops above 34.54 got them run, because the high of the day was 34.59. So by 5 cents, they were just enough aggressive buyers to stop out these guys to the upside, and anyone who was in this sequence here got stopped out if they had their stops above this particular pivot. All right. So now, what do we expect on Monday? What's going to possibly happen? So one of 3 scenarios. Are the buyers of the VIX, do we have some sort of fear event, and they're able to push things higher again, turning this sequence back green by breaking above Friday's high? Or do we see some more profit taking and the buyers of equities take control again for it to come back into these moving averages? Or do we simply chop sideways now because of the wide range that we would set up here on the week? So we have a very wide range week here, a 2% week for the, a 10% move on the VIX for the week, or the 2% move for the week on the SPY. Now, do we sit inside this range here now, or do we somehow break out of the ranges on either side? So if we take a look at the 4-hour chart for a second for the VIX, it'll give us a few more clues. So we talked about it already. On Friday, we had that gap up that was able to then take out anyone who had their stops up here at 34.54. And then we had profit takers, right? So now we had this inside bar set up on Thursday, popped to the upside, and any late longs got their stops taken out if they put them very tight. And now we need to see on Monday, do we have more sellers stepping to the VIX and going after the guys who got long here, and going after their stops, or do the buyers step back in here on the VIX product and push it higher again to get to new highs? So you want to see, in terms of who's in control here, are they able to break above 34.30, or do we come back into these moving averages and begin to test the metal of the bulls on the VIX? All right, let's take a look now on the spider. So basically the mirror image of the VIX product. So the spider ran in the month, outside week on the previous week. Again, about a 2% range here. So the question is, how do you get out of this range for the coming week? So this coming week, we have a number of earnings some number of big names coming out. This is the earnings are winding down. So is there going to be enough volatility to push it out of this range? Or do we simply go sideways here, which is also a possibility. You want to watch for that. On the daily chart, we can see we came close to hitting that 50 period moving average here. But certainly we have broken below most of the big moving averages. So that's the 5, 10, and the 20. And the 50 is the next big moving average that many traders are watching for. Okay. So on the 2-day chart on the spider, once again, basically the mirror image of the VIX. So we have this issue now where we have price trading below the monthly open on the spider, right? So we definitely have a red month here. So if we're looking for things to line up in terms of time frame alignment, you want to see, for a full time frame alignment to happen, you want to see price trading in accordance with its weekly and monthly openings. So next week, depending on how things open, if it's a green week, we're going to have a bit of time frame conflict because we're going to have a red month possibly and a red week. And then you're going to have a bit of chop going on here now as they fight between the weekly open that could be green and the monthly, which is currently trading red. Okay, so we need to watch out for that because that could just set up a bunch of chop, and that's something you need to be watching out for. Let's take a look at the Qs, and basically close to a mirror image of the spiders. So right now, this Qs also traded down close to 2% for the week, but we have the exact same kind of looking pattern playing out here on the Qs. So red on the month, outside red week last week. Same thing here, came close to touching the 50 period EMEA, and once again outside day followed by a down bar, and then finding a bit of support here on that particular moving average. But once again, we need to be watching out for time frame alignment and seeing if this weekly open, whether it's going to align with the monthly open, excuse me. Interestingly enough, I'm not going to talk too much about Russell and Dow because the charts look very, very similar to the spiders and Qs. But the one thing I do want to highlight in terms of the Dow and the Russell is the monthly chart. So the Dow on the monthly is currently, even though we're still early in the month, it's inside month, right? And likewise, same thing on the Russell and Dow. They're both inside months on those two particular indices. Now the Qs and spiders, they were actually able to log a slight higher high in March above February. So spiders and Qs both had slight higher highs, so it cracked that inside month condition. But what we need to watch out here for now are clues, because what we saw happen on the Russell and the Dow is that we had, in this example here, for instance, the Dow, we had a red month back in October, a red month, which is an outside bar, followed by an inside bar. That was the outside bar condition, which showed us that there was aggression both on the buyers and sellers. Then we had an inside consolidation pattern by the inside month, and then that breakdown. So once it took out the lows of November, we had that big swish down in December. Now January, as we all know, the bulls fought back and were able to turn the month green, and in fact took back a lot of that range. February we had an inside month and up, and now March is shaping up to be an inside month right now. So, what does March look like, right? So right now it's inside month. Do we stay inside month and just chop sideways, which is a possibility, or do we somehow, or does it somehow break back up again and find its way to above February's range? Or worst case scenario for the bulls, that is we end the month as an inside bar like this, or it breaks back down and takes out the low of February, which would then make the January pivot as a pivot to go after in terms of potential targets for sellers. Okay, so the issue now for the Dow and for the Russell and Qs and spiders is that some of the easy pivots have already been taken out. So you'll see here on the spider that we had a pivot here at 260.30, big outside bar placed in the first week of December, and that got taken out back in the last week of February. Same thing with the Russell. We had that pivot here, same week in December, and that pivot got taken out on the February 18th week on the Russell. And you see the same thing happening with the Qs. So that pivot got taken out, and the spiders got taken out. So a lot of the easy pivots have already been taken out. So now the question is, is there enough aggression on the buyers by the buyer side to again to take control and push prices higher? But right now, it's looking like the buyers have run out a bit of steam here now, and it may require a bit of time for the buyers to settle back into things and take control back from the sellers. So right now, it's definitely a situation where there may be some buying exhaustion, and it's up to the buyers to prove themselves now, because right now the sellers definitely have the upper hand, and it looks like it's just easier for the markets to trail downwards versus the buyers stepping up and seeing new capital inflows come in to take this market higher. Let's now talk about the long bond. Interesting story here, TLT. So TLT currently trading, currently a green month, and it's kind of quite the run over the past week, as did equities and oil. But right now we had an inside month last month, back in February, a red month that is. It did inside month and down to begin the month, but has quickly now come back through the range. So now looking at the weekly, what we're actually seeing here is for this sequence here, it's quite significant. We had an outside bar followed by an inside bar. So we had buyers and sellers quite aggressive back in the first week of February. We had consolidation, and it looked that buyers were going to take control here and take off with the take off in terms of price. Sellers quickly stepped in. We had a slight higher high, trapping any late longs, and then they smashed it down, taking out any buyers who had tight stops. It ran their stops, their stops, their stops, and their stops. Anyone who has stops in this area was taken out on this bar. Okay. Now we have a weekly inside condition pattern that played out last week. So here now is the potential for buyers of bonds to take back control by breaking above last week's high. So the high here is 121.69. If we see 121.69 get taken out, then the next pivot here would be 122.54. So that would be significant, because then it would be quite apparent that anyone who had their stops up here would be in trouble of getting stopped out, and that would be a good place for buyers to step up and to look for liquidity. Okay, so on the daily chart, again, we had 1, 2, 3, 4, 5 consecutive days green, and on the 2-day chart, we had this whole sequence of price action, all starting off by this 2-day inside bar pattern. Basically consolidated right there. As you can see on the daily chart, we had 2 days consolidation as represented by this inside bar. Once this inside bar broke out, so above 1987, it was off to the races. And we can see here now that they're basically chasing after these pivots that identified here on the weekly levels. So definitely something to watch out here for, because this is definitely warning us that that yields could potentially go back lower if prices keep heading up. So let's go on to the next one. Let's talk about GLD, as there's been a lot of talk about gold in the past couple of weeks. Now it looked like the gold trade had been broken up until last couple of weeks, up until Friday. Friday things changed significantly, and let's talk about why. So we had 2 consecutive red months so far. Well, right now the month's not closed out yet, but this is right now, it's still a red month. But back in February, with equities, making a big comeback, it didn't look like there was any reason to own gold anymore. So gold, as in terms of the monthly chart, closed the month as a shooting star pattern. Now currently, this is only the second week of March. We currently have a bullish hammer countering that shooting star. Weekly chart currently in green, and this is what it looks like on the daily chart. So the daily chart all begins here. So we have the weekly, which opens right there, and price hovers around the weekly open for 1, 2, 3, 4 sessions until it finally pops up on Friday. Right, so Friday, what was a consequence of Friday was because we had that consolidation. If you look at that 2-day chart, basically we consolidated for 2 days right at the weekly open, and then once they were able to break above there, it was a gap and go type of situation. So on Friday, everyone jumped into gold products, so GDX, Nugget, GDXJ, junior miners, and they jump back into the fray again. So what can we expect from gold? Well, with GLD, you still have a lot of range to the upside. There's potentially a lot of folks who got short in the sequence here, and you have a chance here to go after some of these pivots. The only question here now is how it sets up. So ideally, we find a place where it consolidates a bit to give us a small risk to reward type of scenario. You don't have to risk a lot of money for the possibility of a big reward in terms of a good asymmetrical trade. So keep your eyes out on GLD, because right now it's making its way back up again. And ideally, we just look for a good spot to get back long again if you didn't take this setup here back in on Thursday. So the hard thing with this trade is that unless you got in early, it was hard not to chase, right? So here we had the classic outside-inside bar pattern happening right on the weekly, but unless you took the trade before it triggered on Friday, you would have missed the trade. You would have had to chase here, and now you have to be concerned about whether or not people take profits or not, and it comes back through the range again and gaps fills that. So right now, you miss catching the reversal if you miss this gap up, but if this thing keeps moving higher, there'll be ample opportunity for this thing to consolidate on the 4-hour chart before it moves back up again, if it does moves back up again to reclaim some of this range. Okay, let's talk about Bitcoin now. Speaking of gold, let's talk about Bitcoin. So Bitcoin here, as we speak, getting very close to, or trying very hard to, reclaim the 4,000 level. So in fact, looks like today it did claim 4,000 for a little bit of time. And Bitcoin is really setting up here for something potentially big as we speak. If we take a look at the monthly chart, obviously the Bitcoin's been in a protracted downtrend, but now we have some productive consolidative action here since the month of December. So December, January, and February. January we had that inside bar. So very, very low volatile environment. Things are not trading heavily. We have last month, which we had an outside bar. So this high is higher than that high, this low lower than that low, and currently trading, second week of March, currently trading inside last week's range, last month's range. In terms of the weekly action here, things are moving up slowly, right? This is not a market that's moving very quickly. In fact, equities has more volatility than Bitcoin at the moment. But if we look at the weekly chart, we had our outside-inside pattern, which broke to the upside. Profit takers quickly came in, consolidated. It broke up above last week's range here at 39.88, and now it's slowly making its way higher. So right now it's starting at 39.94. So right now it's currently trading above that inside week from the previous week, and it's still making weights higher and higher. So ideally, if you don't want to chase, you're going to wait for the monthly to set up for you, because the ranges are so tight that you don't want to be taking trades that are too far extended and worrying about trade location and having it come back against you. So Bitcoin, it is setting up, but it is still in a very tight range. If you take a look at it again, we're trading within December's range. So all this, for the past 3 months here now, January, February, March, we're inside of December's range. So it's a very, very tight period of trading, even though you do have moves where you'll have 4% days or 2% days. Overall, it's a very, very tight range, and unless you're very active, there's no point to get too active, because you're going to get chopped up in this sequence because you're trading inside of this range here. So if I just draw it very quickly here, you'll see what I'm talking about. So if I draw in this sequence here, I'm just going to link my charts. This is the importance of watching out and seeing what you're trading inside. So basically, as I mentioned already, we're trading inside December's range. So this entire sequence here that we see highlighted in blue, that's chop, right? So you don't want to be getting too aggressive because you're trading inside a choppy mess right now. So this is what you can expect when you're trading in a range-bound session, a range-bound market. So nothing to get too excited about, even though some of the bars, they look very exciting. Take a step back, look at the bigger picture, and see that there could be something bigger setting up here if we have another consolidation, or if we can break above these highs. Then there's a possibility that we go higher. Once again, you never know if the crypto winter extends, and if you're a seller and you have that bias to the short side, what you want to be looking for is this bar getting taken out on the monthly side. So the low of that needs to get taken out, and as you can see in the weekly, we have a small trend to the upside. If we can begin to break, let's say, last week's lows, then that puts this kind of intermediate trend in danger of breaking, and for the sellers to begin to look to go after the pivots in the previous weeks. Okay, so let's talk about one final market here, and that is UKOIL. Okay, so good old Brent crude oil. So on the monthly chart, still it is a inside month for crude, and this comes after having 2 consecutive nice green months. So January was a pretty big month. It was up 14%, even though that was an inside month. It just shows you how crazy things were back in December. We had a minus 9% month, and then we had an inside bar on January to make to give it a 14% gain. We had the inside month and up in February, so things were full steam, up another 8.5%, and now right now slightly red, but it's still an inside month and early in the month. Weekly, not telling us much right now. Slight uptrend, as we can tell already. On the daily chart, this is what's important to highlight here. So we had a sequence here on Monday, on last week that was quite volatile. So on Monday we had that large outside day in equities and in oil, so it created that outside range. And for the entire week, we traded inside that outside bar pattern, right? So here's Tuesday, Wednesday, Friday, Monday, Tuesday, Wednesday, Thursday. So most of last week was trading inside this pattern up until Friday. So up until Thursday here, it looked like the buyers had it under control, and we're gonna break through the tops of these inside bars and take out the top of this outside bar pattern. The only issue was that we didn't have full time frame alignment. So the orange line once again represents the monthly open, and the buyers were just not able to break above and hold above March's monthly open. So Thursday, we had the condition here where it broke above. We had an inside bar break. It ended up being a fake breakout. And then on Friday, they quickly stepped in. They gapped it down. It opened here. They gapped it down. Well, on the USO anyways, they gapped it down. And they pushed it down. And they stopped out anyone who was long in this sequence, including these guys here and those guys there. Right? So now it's kind of reset. Now we have to wait and see what happens out of this sequence here, because as you can see, it's just trading sideways. So if you zoom in really tight, then it looks like a lot is happening. In fact, the ranges are all right. But if you look on the 2-day chart, you can see it's really not going anywhere at the moment. So it's hard to get too aggressively long or short, because what you're seeing here now is, if you were a buyer, if you're a seller, then it looked very bearish until Friday when it got met with a bullish hammer. So we had a shooting star followed by a bullish hammer, and now the buyers could step back into here again. And if you can crack above this month's open, which is again above the high of 66.38, which is that orange line, if you can get above there and stay above there, then the buyers are back in control and things will be trading in full time frame alignment. However, if the buyers struggle to stay above that area, then we can potentially see things kind of work their way back to the downside again and back through this range that we had set up in February, because that would be the equivalent of an inside bar reversal. So February we had that inside bar break to the upside. If buyers or sellers, are able to sell off and push it back to this range, then any buyers who are late to the trade here would likely have their stops down here, and that would put them at risk of getting stopped out. If that bar gets taken out, then this bar will be in play here, that low there, and there'll be the chance that again sellers can take over and push it back further. But again, that's a lot of work for the sellers to still do. The buyers are still in control because it's still an inside month, green week. So right now we have a lot of time from alignment conflict. So there isn't a lot of high probability things to be doing on the bigger time frame charts. So if we zoom in really quickly on the 4-hour chart, again you just see the strength of the buyers. The sellers were able to sell it down. They were briefly able to break below the weekly's open, right, for a couple bars, but quickly the buyers stepped in on Friday. It looked bad on Friday morning, but the buyers quickly stepped in. You can see the buying power here, the volume, and they pushed it back up again. And now anyone who got short in this sequence is at risk of getting stopped out if the buyers can continue to push it up higher. All right. So I hope this video was useful to you. I wish you a good trading week and happy trading.